Hey, Mike DeSepoli, Heritage Financial Advisory Group. Hope you're all doing well. Welcome to the Heritage Market Pulse for Friday, March 11th, 2022. We're back to give you an update on the markets, the economy. We had a lot of news this week around the economy, some economic data points we want to discuss. So let's get right to it. Start out with the big one, the inflation report, the CPI, Consumer Price Index, came out yesterday, that be Thursday morning, showing a 7.9% year over year increase. We all know at this point that inflation is prevalent, it's running hot, and it's something that has been persistent over the last year. The increase for the month of February was about 0.5%. And again, 7.9% is well above the long run average of 2%. So we know we've spent a lot of time on this recently. We are seeing the incremental increases start to slow down a little bit, which is encouraging. But I think we've all been out there in the real economy, and most of you would probably agree that we think the inflation rate is much higher than 7.9% as we see certain essential household goods, durable products, consumer goods, etc., that have increased in price a lot more than just 8%. So it remains to be seen where this goes. We still believe that through technological advances and continued easing of the supply chain, we will see inflation inflect down over time. But each month that these reports come out, it's the first thing we want to look at is what is the year over year increase and what direction is it headed. So let's get into the markets. Markets are really haven't changed much since we spoke earlier in the week. Markets are working through this bottoming process. And we know this is a very difficult, and it can be a type of process that puts a lot of emotional duress on investors. And folks, that's really exactly what these bottoms are supposed to do to people, right? If they were easy, if they were all V-shaped, investors would never sell at the wrong time. Everybody would buy low and sell high. And while that is the objective, of course, we know that unfortunately many people are unable to do that because they allow their emotions to take over, to grab the steering wheel, and to hijack where they are supposed to be going. So we're going to make sure that that's not the case here. We want to give you as much information around this bottom as we can to make sure that you see what we see and that we see the path forward. We can get there together. So markets are chopping in a range here. This square that we've drawn onto the chart here shows you this bottoming process in place. We've had a couple upward bounces and lower retests, but we are still within the range here. So, at this point, folks, the markets are doing the heavy lifting that needs to be done to put this correction behind us to get a sustainable, tradable bottom in place. We think that is what the market is working through here. And I think there's a lot of evidence to show that, right? We've seen the extreme volatility in the markets where the market's up 500 points one day, down 500 the next day, up 450 the day after, right? And I know this is really a frenzy of big moves going back and forth in both directions, but we understand that this is what is to be expected around bottoms, right? We talk about volatility. Volatility is like grapes because it comes in clusters, and we tend to see a lot of those clusters towards bottoms, right? So again, constructive action. We know it doesn't feel like it. Going through these things, one day you feel great, the next day you're retesting the lows again, and you feel like heck. We understand that for investors, but keep calm, hang on. We think we're getting to where we need to get to, and the market is doing the dirty work that needs to be done. We know that this market right now is essentially 100% news driven, right? It's 100% news driven. Investors have totally taken their focus off of the financial data, the economics, and everything that matters to financial markets, and we're focused on geopolitical conflicts, right? Very understandably so. We have a war going on across the world. Naturally, investors are going to be concerned and they're going to pay attention. But eventually, their focus is going to shift back to the things that actually propel financial markets, which are corporate earnings, liquidity, and all the other different fundamental data points for the U.S. economy, which still look, aside from inflation, pretty good. So, and how do we know that that is the case? Let's take a look at something. This is the NASDAQ futures. I'm just highlighting. So the futures market, for those of you unaware, trades 24 hours a day. So this is some of the areas and data points that we'll look at overnight to see how markets are trading, even when they're not open here in the U.S. And you'll see here this morning, shortly before 6 a.m., some news broke that said that there was some positive signs of encouragement that the Russians and Ukrainians were moving closer to strike an agreement on a ceasefire and some sort of a peace accord, right? So naturally, you can see an immediate spike in the market. Now, I'm not highlighting this to show you that we should feel good about an overnight spike in the futures, but more so to display the point that these markets are entirely news driven, right? We get a piece of good news, market immediately shoots higher, and then other news outlets come out, throw cold water on that news, say, well, I don't think this is any new developments. We heard this news 3 days ago. We don't think we're that close to peace, yada, yada, yada. And again, markets retrace that initial pop. So we're seeing the market is hostage to news, which is very normal when you have non-market events that are dictating the world news flow, right? So eventually markets will start to focus on the things that matter. We plan to be there when that time comes, and we think we'll be well positioned for it when that happens because, folks, even though price in the market has been ugly, the fundamentals under the hood of this market have not been ugly. Corporate profits continue to climb. Companies in this market that are reporting earnings continue to raise their estimates for future quarters. So the performance of the companies in the market currently is not lining up with the price action in the market. And that happens from time to time, and that is where we try to find opportunities, right? When a company is improving, but their stock price is declining, there is a big dislocation there, and we seek to take advantage of it when we can. Let's take a look at how investors are doing in terms of sentiment, right? The fear and greed index. Folks, quite frankly, right now, investors are terrified. And it's hard to blame them, right? You see these moves up 700, down 600, up 800, down 900. These are the types of moves that really tend to shake people out of this market. And we can see that with the fear and greed index. We are stuck in extreme fear levels. We've been here for the better part of a week, and we're really getting down to that lower end of the fear and greed spectrum here. And this is a good news for contrarian investors because let's scroll down here and take a look. Here's the fear and greed over time going back to 2019. And if you did nothing else and you studied nothing else of any of the data points in the markets, and all you did was be a seller when the fear and greed index hit extreme greed, and you were a buyer when the fear and greed index hit extreme fear, you would have done quite all right for yourself. So again, we rely on a lot of data points, that many of which are pointing in the same direction right now, which are constructive. But looking at this, investors are about as scared as they have been at any point over the last 2+ years, except for the bottom of the March 2020 pandemic lows. So it's kind of hard to believe that investors feel worse today than they did back then, as things in our economy here and on the COVID front continue to improve. But nonetheless, we don't get to tell investors how they want to feel or how they should feel. All we can do is react to the data in front of us and make sure that we take our emotions out of it. So this tells us a lot of investors are throwing in the towel. They are extremely fearful of this market. And again, we can't blame them with the way the news flow has been, but the news flow will not dominate, okay, will not dominate market price levels forever. Now, let's take a look at something else. I thought this was really important for us to discuss here today. This chart, I think, really perfectly encapsulates, right, what we're going through now and really what we've seen in this market over the last decade plus, right? Here's all the reasons that you should have sold and left the market, right? There's plenty of them. You can read them for yourself. There's some really big ones along the way here, all different things that we've encountered as a country, different obstacles that we've climbed over, whether it was bankruptcies by individual companies, whether it was concerns about debt and defaults in Europe, the recessions that we've gone through for earnings in the corporate stock market. We had Ebola scares, we had coronavirus, we had so many different things just over the course of the last 12+ years since the bottom in March of 2009, and yet the market continues to keep its resolve and to move itself forward. And how does this happen? How are markets able to do this? You've heard me say this. Markets love to climb the wall of worry. It's the worries in the market that create these buying opportunities. And for investors that have a plan, that are able to keep their resolve, keep their cool, and apply a rules-based approach to investing, where when we have good quality investments, we continue to average down on those while we go through these corrections so that we can enjoy the ride back up and expedite that process of getting above water on some of these investments. So again, look, plenty of reasons to sell. Many investors were probably scared through each and every one of these events as they transpired, but nonetheless, the right thing to do in many of these events was nothing, right? Even though it seemed like they were all so clearly obvious problems for the market and for the economy, the market got over them, the economy got over them, and we have continued to grow and advance from these points. So we wanted to share this, keep it in perspective. We know the current scenario is scary. It's been a couple months of this. We're going on 5 or 6 months where the markets have really been pretty funky, and we know that that is tough. But remember, folks, even just as recently going back, I know it's hard to see this, but you go back in the 2015 and in and around that time frame, markets went nowhere for 20 months, just absolutely nowhere for 20 months. And again, that's not what we're calling for here. We don't think this is going to take 20 plus months for this to run its course. So that is a totally different scenario than what we see here today. But we saw a lot of the same behaviors back then that we're seeing now, where people just couldn't see how the markets were ever going to go higher again. They didn't see anything positive about the prospects for the future. All the best days were behind us in terms of all the companies we've owned, on and on and on. So, folks, we've been here before. We'll be here again at some point in the future. We know how to play it. We know what to do. So stick with it. We know that this is tough, but it will be rewarding when we come through this intact on the other side. So if you have any questions, please reach out to us. We're always here to talk to you about the things that are on your mind. I know investors have a lot on their mind recently. We feel for you. We're there for you. We'll always be here for you. So give us a call if you need us. And have a great weekend. We'll see you back on Monday for the Heritage Market Update.